Hello, everyone. Today is Monday, August the 7th. I just got back from my holidays yesterday after 2 weeks, mostly off the grid. So, not much internet access. So, I didn't do much trading or any videos in that time. I did manage to place a couple of trades last week, and I think I took off a couple of trades. But overall, I was pretty light on my trades, just so that I don't have to worry about that since I didn't have internet all the time. And but with that in mind, we will be able to place some more trades as our book is pretty light at the moment. So why don't we take a look and see where we at right now? And I already filled this up here. So today is, let me see just the VIX if it changed. The VIX is 1610. Okay, so 1610, and our delta is 49, theta 33. Buying power used is 1140, which is pretty low, and we have some room to put more trades. It says maximum 16 trades. With maximum, we only have 12 at the moment. So, and we didn't put any new trades this week. So we're gonna go ahead and place one today. Let's see what that might look like. The market is up 0.66 today, and let's see what we have. Probably will be going for 74 days. Let's see, 9 delta pays us 21.50. All right, that looks fine. So let's see if we can get a couple of these at, well, let's start with a little bit higher price just to see if we can get it. No, obviously not. So we're just gonna go and replace, go down to mid price and see if we can get filled in here. Looks like not. I think if we go down to 21, we should be able to. All right, that's fine. So 21 at 74 days. Now we need to pick our PDS expiration, and we like around 45, but there is nothing here. We have 39 and we have 53. Between those two, I think we'll go for 39. So with 39, if you go, let's just put this, there you go, just a sec. So 74 minus 39 as 35. So there's 35 days difference between those two expirations. And on this little chart here, we see that 35 days is right here. So we should be paying around 20% for our PDS. And given that we collected, what did we collect? 21. So just to put it here, right? So, okay. So 21 times 2, and then times 0.2, it's 8.4. So we should be paying around 8.4 roughly for our PDS. So let's see what we can get for that money. So we start around 100 points, roughly 100 points higher than 40.25. So 40, say 41.30, and that would give us 38.30 for our, okay, there is, okay, so we can go a little bit higher. As you can see, it's only 6.5. So let's just go 39.10 and 41.10. I mean 42.10. So that gives us 300, and it's a little bit higher, but we don't want to be selling where we already sold 2 of them here. So we can either just move this up a little bit to, no, let's see. why don't we just go for 875 and call it a day? If we can close it at that, that's close enough. Yeah, but the price is going to be a little bit higher. Let's cancel this order and then let's go and do it again. 4180. Let's see here. That is, we can pay a bit more. So 90. Oops, 90, and then pay a bit more here. There you go. Lately, the put debit spreads have been priced really funky, and it's kind of hard to get a fill, even if you overpaid a little bit. So we're gonna need some patience and some massaging, and hopefully we'll get there soon. All right, and we're filled at 875, so just a little bit higher than what we wanted to pay. Okay, let's record that trade onto our sheet. And to do that, we'll go here, 16.10. We'll do this later. They opened 7 and 23. And we did, just a sec, we did 40.25. 40.25, and for our PDS we did 41.90, 38.90, 41.90, 38.90, and just a second, the days, it was 39 and 74, 39 and 74. So well, let's see. 4577, the MES was it 4577. What is this? It looks like I made a mistake here last time. All right, no. There you go. So we paid 875 and got 21. 875. And we got 21 here. All right, so this is the trade. So it says right here that we paid just a little bit over 20% for our PDS, which means we can close the trade at around 75% profit on the naked puts, or when those puts cost around 5 and change. Credit for the puts was 2100, and we're going to go ahead and record this now on our call side. So not 2100, I'm sorry, 210. So for this, we need to take a look at the expiration date for the PDS, because this is how long the trade will last at the most. Otherwise, we'll be closing it either way. So 15, 9, and 210. So if we go here, we go and we say 15, 9, and 210. And then 50% of that is 105. And this is my core credit spread sheet, where we keep track of the trades that we did that don't have associated core credit spread with them. So right now we have quite a few of them, and we only put these on when the VIX is above 16. We don't put it when it's under 16. So right now it's 16.10. We could consider putting one on, but I don't think we will. At the moment, we'll wait a little bit. But this is what we would be doing. We would say, for example, we have 18th of August and then 31st of August. We have these 6 trades, and let's say VIX is 16. So what we're saying is that we would take these here and use 16% of the profit that is guaranteed should the market go up, and we would come up with a total of 95, right? So we can put $95 at risk here, and those would only get challenged if the market goes up. But in that case, all of these would be profitable. There's no two ways. We can't be losing on both sides. So if we were to do that, we would go here. We would say 95, and on expiration of 31.8. So we would go to 31.8, 31.8 right here, and we would do we would sell one around here, and we would just adjust it to get the 95 max loss here. So right now it's at 85, so we can make it a little bit wider. So we could do this, for example, or let me see if we could do maybe this. Yeah, we could do this either. So we're looking for probability of success at around 50%. I'm not sure why this is showing 38. It shouldn't be 38 because the green line is right here. So there is something wrong with the software, unless we have some other trade. Well, let me just delete everything just to make sure that. So 110, 39. Okay. It's strange. So if we go down, let me see. And if we go up, no. This looks like something is off with the software at the moment. In any case, we're looking for this break-even point to be just close to the spot price. And okay, so we would be looking at the max loss of 1.8, 110, and the max profit of 141. But more important than that is the delta. We are looking to get some negative delta. This trade gives us close to 7 negative SPY weighted beta weighted deltas, which is what we need with these trades. These are not meant to be like a huge profit leader. It's more of for balancing purposes and getting some negative delta to the account. They should be breaking even roughly over many trades. They should be breaking even because they're usually around 50% either way. So we're not going to be putting it today. We'll wait a couple of days for that. But let's see what else we have. So at the moment, these are the open trades, and we don't really have anything to close. This is the closest one to getting ready to being harvested at 77%, and we need around 80 or so. So we could take it if we really need it, but buying power is pretty low, so we don't need to do that. And on this one, I'm now putting in when I group them, I put this percentage here. If it's not 80%, 80% is the standard minimum required profit on naked puts for me to close them. But if I did something different when or paid more or less for the put debit spread, which allows me to close earlier or requires me to close later, I can now have a quick glance. So for example, this one, we can close it when it's at 76%. This is one of the call credit spreads right here. And this one here doesn't say anything, so it's 80%, it's standard. So this is actually the one we just opened. So nothing there. This one is at 78, and then this one is at 77, but we are nowhere near that. So everything looks fine. We're probably going to be putting some more trades tomorrow and the rest of the week. But that's all I have for today. Thank you very much. Have a good one.